Hope everyone is having a very nice Friday. Thank God it's Friday. They very aptly named Thank God it's Friday, TGIF. Okay, just want to confirm you guys can see my white screen. Okay, good. Okay, so today I'm going to discuss stuff that I'm seeing in the market right now. I'm also at the end, if people have requests for ideas or charts they want, I can do that and I can go live with that. I also have, if we have extra time, a bit of a DeMark primer as well, the market sentiment stuff that I look at and how to use it effectively. And in the webinar, I'm also going to display some of the new, couple new features that I think are really cool on the new website. And thank you all for your support. It's been a fun process. Fun is an interesting word to use for the process, getting the new site going. So let's get started. I have a bunch of stuff that we're going to go through. And I will be looking up here because I have 3 screens. So that's my main screen up there. Okay, this is the standard disclaimer. There is risk in the markets, as you guys all know. And please read this super fast because it's important. Okay, so the way I look at things right now, the government has absolutely no clue about inflation. Janet Yellen in August said that inflation should subside by the end of 2021, and here we are towards the end of November, and she recently said, I think yesterday, she expects inflationary pressures to ease by the second half of 2022. There is no doubt in my mind that the Fed is behind the curve, and they have a problem. They might have to increase their taper if we see the high inflation data come in, continue to come in over the next couple months. And, you know, I've talked about the Fed chair, who's going to be the next Fed chair, and I think it's going to be Brainard. And the reason I think is that the Democrats are going to want some goody to the progressive Democrats. So Elizabeth Warren, who called Powell a dangerous man, will be very happy if he's gone. And plus Biden, you know, he's going to appoint someone, and the terms are very, very long for a Fed governor, and he has 3 to appoint and a chairman. So he might want to put his stamp on this. Not that I think that much will change, because the path is for the tapering. The difference with Brainard versus Powell will be mostly the regulatory environment with financials. You could see capital returns like buybacks and share repurchases crimp. Mergers as well could be slowed down as well. But today, just one last thing on the Fed. There was discussion saying that the next Fed chairman needs to have a better position on the climate change debate. I just find that we're getting way out of the mandate of what the Fed should do and what the Fed really can do. So let's get going here. This is my favorite chart. This is the net purchases of U.S. equities by individual investors. Now this, in 2021, the cumulative, in 2021, the amount that's been, the inflows this year is greater than the last 20 years combined. It's just, to me, that's just crazy. And that typically happens towards the end of a major bull market. This is our sentiment charts that are on the site again. And What is interesting is we had a very narrow range in market sentiment in the extreme zone above 80 for the last 9 months. And then we had our first 5% dip, which was rather unique we haven't had that. Now, I'll go through market sentiment stuff later on the presentation, but basically we held the 50% level, which is the make or break level. And then we zoomed back up to 93%, which we rarely see above 90, and above 93, I think we've hit maybe 3 times in the last 5 years. And you can adjust on the site the dates. I like to look at a 2-year. It's defaulted at 1 year. But right now, market sentiment is at 78% on the S&P. And the S&P is hitting a new high. It had a closing high yesterday, all-time high. So there's a bit of a divergence happening right here. And it'll be interesting to see if that continues. We had one in January and February of 2020. The talk on the news today is that COVID lockdowns in Europe are starting to happen again. The case counts are going up. And it's just kind of bizarre that market participants are jamming into the good old lockdown stocks again. Now here's the S&P. And as you see that we're now on day 11 of 13. It's 11 under there, under that blue 4. We had an aggressive sequential. It's a little bit more liberal as far as how the sequential rules are. We had a combo 13 here. Combo usually will tell you the final run or exhaustion signal on a very strong trend, and it needed to make a new high, which it did here for the 13. So we could see a little bit more upside here to get that 13. And keep in mind, the 13 has to come above the close of the 8th bar. That's just one of the little rules. And RSI is making a negative divergence here. And we'll talk about some negative divergences in a few. Here's the OEX, the meat of the S&P, the S&P 100. And we did get yesterday on the close, the sequential 13 here. So basically, when you do have a sequential 13, the rule of thumb is that there should be a price reversal within the next 12 bars or days, if it's a daily chart. And if it doesn't happen, the trend can continue. And we did get a bit of a further move here, which was surprising to me back in late summer, because usually the summer, this period gets a little choppy. But we did get the setup 9 worked here. These are sometimes short term. I thought we were going to get a big, deeper move here, and I was, and that's on the S&P as well. I was a little surprised. This is the, oops, click the right way. Okay, the NDX and the NASDAQ composite, the Qs, and the NASDAQ futures did get the sequential 13 yesterday. There's a little bit more strength happening. That's due to the mega cap stocks. Currently, the market, the S&P is flat, and the NASDAQ 100 is up 62 basis points, and you have negative breadth once again. And breadth has been a problem that's starting to show up, and that tends to be another negative divergence that happens towards the later part of a move. And that's all due to the mega cap, which I'm looking at the Microsoft, Apple, Google, Amazon. It's up 78 basis points today. So people are hiding in those names. They're great companies, very overbought, extended, overloved. And keep in mind, Apple had a not such a great earnings report and guidance. Same thing with Amazon, but they're at all-time highs again. Go figure. Here's the Russell, and it's been in this miserable range all year, and it's held the 210 level, effectively made a new high, a wave 5 high. It hit the price objective of 239. This was the third wave price objective here with the setup, or excuse me, yeah, sell setup 9. I thought we were going to peak right here, but we got another countdown moving higher, partly because we had this 9, which was the 13 here. And then you had a new 9, which gave us a little bit of a pullback for a few days, and then resumed higher, starting a new sequential. Now, if one rule of thumb, the pending sequential here can cancel if this TDST level breaks. And this is where the gap up started with the setup 9. You see it started here with this setup 9. This one started here with the setup 9. And these have worked well as support levels when you do have pullbacks, and it's worked really well on the S&P. But basically, if you do, it's on day 3 of the setup on the downside. If it completes to 9, then this pending countdown will go away. So it's just been a miserable type of trade. It looks weaker. The RSI is back to 50%, a little below. And this is the fear and greed oscillator, and it's turned red again. This is one of my favorite charts and one of the more bizarre charts that I've seen over the last year. This is the S&P 500 with the 7-day moving average of the put-call ratio. And as you see, this was the typical range that we had been in for many years. And then at the beginning of 2020, it broke below that when you just started to see huge call buying happen. The pandemic hit and put buying spiked this thing higher. That was a good buy signal there. But then we settled back down, and we've stayed under the 55 level, which is a very low level in itself for the put call ratio. And we recently hit 0.4 on the put call. That's very low. It started to move up. When it moves up, the market should see some pullback here. But it's been just unrelenting call buying. I think that what was I mentioning today in the chat room? Today, the expiration is non-leap expiration, non-January expiration. 746 billion of single stock options are set to expire. That's the 3rd largest expiration outside of a January ever. That's just massive. So people continue to buy calls. There's rampant speculation out here. And if this thing continues to start to move up, this will come back down. This was these last year of these super shallow pullbacks. Then we had the 5% pullback, which got it almost back up to the 55 level there. But when this thing breaks out up here, then we know that we have something a little different than what we've seen over the last year. So one of the divergences that I'm seeing, the S&P stocks above the 20-day exponential moving average has been slowly coming down a little bit. The 50-day is coming down a little bit, and even the 200-day is starting to come down a little bit. And that's kind of strange happening when the index is hitting an all-time high or closing high, and it's probably down a little bit more. Now, one of the things that I like to show for oversold conditions is when you get the 20-day down to under the 20% level. I like to see the 50-day under 20 for 25% level. We really just haven't had a good oversold reading on this. So stay tuned on that. This is the advanced decline for the S&P here, the mid cap and small cap. And it's been declining as the markets have been moving to new highs. Now the mid cap and small cap have come down a bit. So that actually makes a little bit of sense, but it's not oversold. And it's a bit of a divergence here, a big divergence for the S&P. I don't like the cumulative breadth measures. It doesn't work well for me. The construction's not great. Okay, this is our monitor that I'm hoping that we can have on the website. There's a lot of data on here, a lot of moving parts, and I'm going to go over it later of how to use it effectively, but I'm just going to give some highlights here. First of all, I'll tell you, this is force ranked, all these ETFs by the percentage above the 50-day moving average. And As you see, semiconductors, SMH, almost 14% above the 50-day moving average. This is the 20-day moving average, 8% above, and 3.35% above the 10-day. And it's starting to become a little bit shaky here. And it's very strange that we've had new highs in the market. Strange because we're starting to see more ETFs break below the 10-day and the 20-day. And if you remember just a few weeks ago that we had energy, the energy ETFs were the highest up here. They gravitated towards the highs. And now you have OIH down here, 11% below the 50-day moving average, just been murdered here. Well, I have some more charts on this. You have XOP also down, and XLE right here also down. Financials were up there as well. XLF is here. KBE, which is my favorite bank index. XLF is not great because one of the largest weightings is Berkshire Hathaway, and that's not necessarily a pure financial. They've got railroads and Seas Candy. But right now, you see a few things happening. XRT, the retailer, it just broke below the 10-day moving average. It's down hard today. Look, it's been just, it's a strange index because you have some big weightings that really shouldn't be there. GME, GameStop was one of the largest weightings in there just recently. So it made very, very little sense, but still, I'm watching it today. You had some big moves the other day. Now with Macy's, it's down 5%, giving back. Nordstrom is down. Kohl's is down 5%. And I think that's, there's some risk here on these. They've just gotten way ahead of themselves. So let me just keep going here. Also, the Euro Stoxx 600, we did get some sell countdown 13s here. We had a little bit of residual momentum here, but we did get a price flip down, which is basically trading below 4 bars closed previous. Excuse me there. And RSI was very, very overbought. I like to see the exhaustion signals with an overbought RSI. Just it's a good signal. It doesn't always happen. We were a little overbought here with this combo, but I do think that we are in for a pullback. If there are true lockdowns happening in Europe, this index will pull back. Oops. This is XLY. I'm going to go through some of the key sectors that have been leading the market higher. This chart actually looks very similar to Tesla, since Tesla is now the largest weight in the XLY consumer discretionary. We had a sequential 13 3 days ago, and we've had a little bit more residual momentum. It's not at a new high again, so I'm still just watching this. I truly believe that Tesla will run out of steam or run out of gamma squeezes, and the stock will fall on its own weight. And the bizarre electric vehicle bubble with Rivian and Lucid and Tesla as the top 3 automakers, if you call them automakers, surpassing GM, Ford, and Chrysler, just was completely one for the ages. XLK, we did get the combo and the sequential yesterday, a little bit of residual momentum here. Another divergence, it's 74 on the RSI. It was, I think, 80 at this peak. And, it's really hard to break these trends. And sometimes you'll get these exhaustions, you'll get a little bit of a pullback, but mostly it's a speed bump and slowing things down. But right now, I do believe things are getting way ahead of themselves, especially with on the PPO monitor. Those are, let me just grab them here. XLK is 8% above the 50-day moving average. That's extended. SMH has been a big driver. And as I showed yesterday on the Daily Note, that NVIDIA is or has been 25% of the total gain in semiconductors, all the indices, SMH and SOX. So it's been, I think gamma squeeze, the same person is probably doing it. that's doing it with Tesla is doing it with NVIDIA. It just makes no sense. 80 times earnings, great company, but the valuation makes absolutely no sense. Okay, this again is the KBE, the banking index, S&P Bank Index. I like this a lot. It got ahead of itself, and clearly I was a little confused or concerned because rates had been moving higher, and I thought, okay, we're gonna see this continue because we had this move higher in rates, and perhaps we're slowing in rates on the long end right now, and we're going to pause. Maybe that's a sign of a risk off. I'll show you rates in a few. Now everybody's talking about crude, and I think we've had a good call here. Crude, the sentiment was well over 90% here, and that was just way too high. And now we're at 50%. It bounced up yesterday to 50%, and it's make or break right now of what's going to happen. And as you see here, it was make or break here, and it came down and really broke harder. The price was down. It looks a little bit distorted, but it was down enough. This was, of course, January and March, and sentiment got, I think it was a 5% in the bottom in March. That was a good buy, even though crude was negative, which was, I think, a story that isn't written enough about. I think it's just crazy. So crude, the reason I was more cautious on crude is because actually the DeMark signals have worked very, very well for crude and energy stocks. It's a more pure play. It doesn't have the buyback distortions or the QE distortions in here. And I see crude is hitting a new low as we speak, but I grabbed this earlier. This was a 13 here that worked well, just calmed things down, moved to a TDST level there that worked as a support level. Now you had the aggressive sequential triggering early a new 13, which made a new, the sequential 13 a lower high, which was interesting. And that gave us a wave 2. This is the wave 3 downside price objective. I think you'll probably see it within days or maybe even today, but it's on a downside sell set or buy set up 6. So we could get to that 9 and then see a bit of a turn here. So the 71.29 level is a very important TDST level. As you see, it started the setup here. And once the setup is complete, a little DeMark info, then you get the TDST level. And those have been good support levels. You broke the 50-day, the 20-day is rolling over. So I think we're going to see a little bit more downside. I am a buyer of crude and energy stocks as these bottom. And I'm short some energy stocks. Didn't really start off that well, but as you see here, these are also very, very good signals here. This one was a little early, gave a stall here after a few days of poking around, but we had the secondary 13s here. Same thing here, we had all three, the combo, aggressive, and sequential here. We broke down, this is either wave 1 or wave 4. Wave 1 on the downside, the first of 5 waves, would be a lower high bounce. Wave 2, that's still to be determined, or this is wave 4 of 5, and that's wave 1, 2, 3, 4, and then 5 will surpass wave 3. I'm sticking on that. OIH didn't get the sequential, but we did have the combo here. It worked well here, and I've traded the energy stocks well this year, selling into strength and then buying into some weakness. I was a little late getting into them here, but I shorted them up here, and they're working out. They're down real hard today, so it's tough market in the energy complex. RSI is getting a little oversold here and can get a little bit more oversold. What matters is it stays under 50% on the bounces, and that's a trend going lower. Now, I'm really excited about this. I grabbed this off of this is a momentum and retirement ETF guide. And I've had a lot of people ask me for a pure, simple, easy to follow momentum guide for the short term and more long term for people that manage their retirement accounts with ETFs. And I think this is something that's working well. It's on the site. I update it usually 2 times a day, depending if there is movement in here. So basically, let me just give everyone just a simple primer on it. Uh, these are this is the average score. I have 5 inputs. These are technical inputs, and I'll show you them in a few. Short term to longer term. The first one is a 9-day RSI, and if it breaks 50%, it's a sell. If it's above 50%, it's a buy. The second input is a 5-day moving average versus a 10-day. The Kopik curve, which is a nice smooth medium indicator, is the third input. And then I have a 13-day moving average versus 34-day, and a 20-day versus the 50-day for the longer term. And I think these work well. And what is interesting here is you can see these scores. Now, 1 is a buy, 2 is basic neutral, and 3 is a sell. And each of these, when it breaks below 50%, it turns into a sell, and above 50%, it's a buy. And if it gets near that 50%, it's a 2. So 1, 2, and 3, it's pretty simple. And I also have a date of the last time it was modified, and that's on the website. One of the cool things on the website is you can also, I've made it very simple where you can follow these and click on the symbol, and it will take you to a stockcharts.com, which is a great site. It's very basic and simple, but I'm trying to keep things simple here and show people a way where they can follow it on their own. They can, if you're not a subscriber to Stock Charts, I think it's a pretty good value. And I've been a subscriber for 20 years, and I'm supposed to be on one of their shows one of these days, but I just haven't had time. Okay, so let me give you just a few things that are starting to pop out at me. The short-term stuff on the Russell and the Diamonds Dow are turning into sells, and the Kopik curve here is a 2. So that's just like a little bit of a heads up. Those microcap R3s on the short term. You have the XLC, XLP, XLE, all in the short term turning to sells. You have some like technology that are all buys here. So you have a score of 1. Going back up to here, you can see that we have a little bit of caution here on the short term, and long term, we are still in buy mode. The European markets, I'm going to put more in, but I just currently have FEZ, which is the Eurostoxx 50. Asian markets, I need to add more. Emerging markets, I need to add more, but it just gets too much. And I might need to run another monitor here, but this isn't all of them here. But as you see here, OIH are all now, or actually most of them are in sells, and this last one is nearly a sell. So it's averaged down here in the red. And you can see semiconductors, all ones here, still very strong. Biotech has been 3s sells for a while. That's from 11-12 was the last time we made an adjustment there. But let me just go through and show you a little how this works. So this is the diamonds here. I'm trying to keep it, again, very simple, and it's been in an uptrend. It got very overbought on the 9-day RSI. And some people have said to me that they will look and see when they're overbought here, they'll take a sell on it, and that's fine. But it broke below the 50% level, it turned to a sell. The 5-day versus 10-day. Now, one thing that I do that is different from what other people use, I look at the MACDs, and that's basically it as a moving average convergence divergence. But instead of adding, having multiple lines, when it turns to a sell, I just have it one line. So it's a 5, 10, 1 setting, and that is clear on these as well. So we have these moving to a sell. The Kopik curve will be on a sell because it's a smoothing average, or moving average basically. And then you still have the long-term up here as buys, but they're turning down. They did have sells here, down here, so you avoided some of the carnage here, and then you bought back. That's how it works. Here's the Russell. And again, the 9-day got very overbought, and this has moved down into a sell, 5-day versus 10-day, and the copper curve is headed that direction, but the longer term are still in buys. This is the bank index, KBE, moved to sells short term. This looks like it's going to be in the sell zone. It's a 2 now. Sometimes I will use this. I'll look at it and say it's moving there, so I'll put a 2 on it. These are still buys here, but it's definitely gapping down and not looking wonderful. Another, talk about gold all the time. This turned to a buy, short term here and here, a little long, it takes a little longer for these to turn, and then here it turned to a buy. So it's a little later on all of these. Breaking news. Okay, so bottom line is with gold, it's just stalled here, and it's been a very difficult trade because you've had these runs and these hopeful runs, and then they fall apart. So I'm watching it right here. It's fading a little here. Still looks pretty strong, and I'm giving it the benefit of the doubt. Silver is almost the same chart. Here it is with the GLD with the DeMark indicators. These, the sequential combo did not work. Obviously, it stalled it for a day or two, and then the sell setup 9 worked. So sometimes when you get into these rangy markets, the sell setup 9s work pretty well towards these top levels here. So it worked as a pretty good, it showed a pretty good level here as a resistance level. Got a little overbought here in RSI, but I'm giving it the benefit of the doubt, and I'd like to see it move. But one of the problems with gold is you're competing with Bitcoin, and Bitcoin is the inflationary, it's the inflationary hedge for this period. Here's the dollar. I've been a bull on the dollar, as everyone knows. We had buy countdown 13s here, and we also, this is the daily, we also had buy countdown 13s on the weekly. So when I see daily and weekly syncing up like that, it's a good sign. So we moved higher. This was actually the second wave, third wave, fourth wave. It's kind of nice that it held this TDST. I mentioned that it needed to hold that here, and it's moved higher, and it stalled out a little bit, gave you back to the 50-day. And that now we have a new sell setup 9 at the upside wave. Oops. I could have bought something, like, oh, I bought 1 million shares of Lucid. Okay. So this sell setup 9 here, wave 5, it's achieved. It's make or break time right now for the dollar, because this essentially should back off a little bit. It's wave 5. It could go more. After a sell setup 9, if you get a continuous trend higher, a new red sequential can start, and that will be, we'll know more in the next week if that continues, if the dollar continues higher. So my call right now is caution on the dollar. Caution on the dollar right now, could back off, and then we'll see. Now, one thing that we have new on the site is Bitcoin bullish sentiment. And I have, it's a flat line right here, because this is all the data I have on the bullish sentiment on Bitcoin going back to January this year. And as you see, it's been, it does move. It's had some great moves. It gets up to 90%. You start to see a pullback. I use a 20-day moving average on sentiment, and the price gives a good, smooth reading of which way things are moving, and I think that's important. But we did get back up to 90% here. We were a little above it here, and we stalled. But here it is. If we break 50%, I think that's going to be the trigger that we'll see this thing move back down. I have a chart here of Bitcoin. Now, Bitcoin. It's actually pretty good with the DeMark of signals. We do have some false signals here and there. Bitcoin is just, absolutely one of the more insane markets because it's a 7-day market, and obviously sometimes we've been wrong on this, but generally speaking, I have to say the record with the mark has been really pretty good. And looking back, and I think the high in 2017, it was a basic new market, and I put it out on this is very pre-hedge fund telemetry. I put it out to some clients saying, I think we're going to see a top here, and that was one day before the actual top in December. Yeah, it's December of 2017. And I said, oh, I don't know what this is, but anyway, it looks like this could pull back. Now, it's either this is wave 3, and wave 3, this is wave 2, held the TDST. That was really textbook. This 13 did not work. This one stalled out for a day, this combo. But since you had this 9 here, gave you this 13, it was a choppy sequential. And then this 9 gave you this 13. So remember, after each setup 9, that's when a sequential can start. It only can start after a completed setup 9. And the combo, actually, why it is here is that it actually works in sync with the start of the setup 9. That's a bit of a mark knowledge-based type stuff. But right now it has reversed down. It's either in wave 4, which will give you, it gave us a new price objective of 84,000 if this level is surpassed, or this is the first wave down of 5. I'm not sure, and we'll know more as we see it develop. But right now it is in pullback mode. I think there's risk to the downside still. Ethereum is bouncing today. Here's the TDST. These are levels that I have been showing. These are some retracement levels, some DeMark retracement levels off the highs. This gave you another cluster of all the DeMark signals you need. This was actually in wave 5. And so this is either going to be a downside wave 1 of 5, a lower high wave 2, and then lower low wave 3, and so on, or this is an ABC correction, lower high B, lower low C, and then it moves higher into a new upside wave of 1, 2, 3, 4, 5. Bond market has been very fun this last year. This was the opening up, reopening, shots in the arm. The market was ripping higher. Inflation had started. You had 5 waves up. You had some exhaustion signals. And then we've seen an A, B, C correction, or this is the first wave down. I'm not quite sure. That seems a little bit extreme. But it held this TDST line here. Again, we don't use these and talk about them enough. I tried to on the notes, but it really was a great support level. And that's kind of why I said I thought this was the first wave, second wave, third wave. Now we finally got the 4th wave, and there is an upside price objective higher towards 2%. And that would qualify once this wave 3 is surpassed. If that also qualifies, that wave 2 will shift unless the wave 5 here is surpassed. So there's a little bit nuances to the waves there, but bottom line is if we get above that, I think that's the sign that rates are going higher. So I've been long recently the cannabis ETF MSOS. I still like it. It's had a big pop and drop, and I'm still in the money on this. I probably will be adding to some of the individual stocks once this stabilizes, but you got to remember this has probably a lot of people in here that are going to be taking tax losses on. And one of the things that I like about MSOS, and it's my friend Todd Harrison's, he's an advisor to it, is that a lot of brokerage firms will not allow an individual or a fund even to purchase individual cannabis names. There's banking regulations that are going to happen, and that will alleviate that. But people can buy MSOS, and as you see this huge volume here, that's money that's come into the ETF. You had a little withdrawal yesterday, but regardless, they have to put this money to work, and they will. They I think got $500 million in new money that came in. So that's really the state of the market right now. I have some stuff that you can actually get on the knowledge base on the site, which is improving, so you can understand how to use the DeMark stuff. These are on there. Gives you some basics that I think is easy to understand. It takes time. These are not the easiest indicators. I've given everybody the Jason Pearl book, which I think is great. It explains it. It's not a Sunday afternoon read unless you're really in need of taking a nap. It's a bore, but certainly it's great for reference when you're looking at our charts. So I have stuff here. I also, I had someone ask about the DeMark screens and how to look at them. This is also on the knowledge base portion of the site. And essentially, green, I'm going to just give you the very quick. Green are buy signals and red are sell signals. This is the Sequential 13, and this was taken back in August. So you saw Ford as a buy signal. That worked out pretty well. Win, I think, worked out pretty well. And then, so you have the Sequential 13 and then the Combo 13. These are daily, and you can see, sells, buys, and then you have the weekly, and weekly are more intermediate term in nature, obviously. And one of the things that we've seen a lot is the number of weekly exhaustion signals on the upside, exhaustion signals, sell signals. And that I think has been really notable this year. I like the signals to highlight for everyone each day, because if you're, for example, you're looking at WIN or LVS and you said, I'm looking to buy these because they're oversold, these should give you some confidence that they're getting oversold, and you could start looking for them as buy signals. There's daily, there's 12s, which is basically on deck. So those are coming soon. And if they're on 12s, you'll probably see them show up on the 13s within a day or a few days. The other thing that I think is really good is the sequential price flip. And this is that new green one that starts with a setup. And that means like STZ made a 4-day closing high. And then these were making 4-day closing lows. And these work well as if people want a little bit more of a confirmation of these 13s working, look at the price flips. So I think that's a good thing. We also, for our institutional and registered advisors, brokers, we do custom screens, and this is one that for a biotech firm that we run sometimes once a week or more as they ask. So that's kind of where I'm at right now, and I want to. Okay, so I'm going to open this up for some questions. So let's go. I'm going to just shut down my. There's Stacy. Okay. Got a couple of questions coming in. Oh, okay. So let me explain. The pink, those are combos. and the orange or more amber 13s, those are the aggressive sequentials. The I coded them, the amber aggressive sequentials, amber, because default is red, and I didn't want to overlap with the sequential. So let me just, some people are asking for some stuff. Oh, by the way, this is a great monitor that I've been showing. This is the Goldman Sachs most short baskets here. So these are tech shorts. They're down 75 basis points today, or excuse me, they're up 20 basis points. The relative versus the Infotech XLK. So you see shorts are actually, the crowded longs are winning right here, but it's really good. I'm putting it on every day, and this is kind of, as you see, this is my dashboard here of how I look at things. These are the mark screens that I run, and I really like using them a lot. Okay, so you guys can still see this, can you? Okay. Let's see, how you doing? So let me just get this chart up here. This is I'm gonna blow it up for you. Okay, can everybody see that? Can my people on my chat room see this? Gina? That's a yes. Okay, cool. This is Twitter. I'm long Twitter, unfortunately. These signals did not work, but I've been paired up. I didn't anticipate it to drop this low, but I've been paired up with Snap as a short, which I covered. Nice gain. I'm still short Facebook, which is still profitable. I can't believe the stock is lifting on the metaverse stuff, but so be it. I like Twitter here. Actually, today, this buy setup 9 might be interesting. It's in wave 5, and it could be the start possibly of a bounce. And so I'm not buying back more. I'll probably buy back more as it starts to stabilize and move a little higher. Live TV. Okay. Okay, I'm looking at questions here. Okay. Let's look at. Okay, let's look for price flips. One that okay. I'm gonna blow this up. I'm gonna show you. Show you AMAT here today. Okay, so it's coming up. AMAT reported earnings. They were a little disappointing, and the stocks reversed down. It's coming. It's coming. Oh, okay. Takes a couple seconds to get all the charts up. I think. Okay. AMAT. Okay. We had a cluster of 13s here. We've had a cluster of 13s on a bunch of different semiconductors. And again, it's being jammed up with the gamma squeeze with NVIDIA. And so, I mean, because it's pure and simple. The weighting of NVIDIA is so high, but bottom line is you do have the price flip here. This up arrow is basically a camouflage where it's a gap down. It's trading above. It's still a gap down, but trading above the open. It's a sign of buying that's coming into the stock, but the bottom line is it's trading lower than the close of 4 bars previous. So that's a price flip down. Certainly, you're going to want to see it reverse down again. So I've had someone ask about Mastercard. I sold Visa. I just don't like the tone of what's going on with Amazon for what they're trying to do is squeeze them for pricing, and they're going to do the same to Mastercard. But Mastercard, sell setup 9. When you get a sell setup 9 here, if you can see this, it happened under the TDST, this red line here. This is where it starts to 1. That's a resistance level. And I've talked about the lower ones as a support level. This did have a price flip down, and it looks like it could test this 335 level. And it just doesn't look real healthy right here. Unfortunately, I'm a big fan of Visa and Mastercard when these things pull back, and it's been very, very hard to buy anything on pullbacks. It had a combo here, sequential here, didn't really do much. QQQ. Talked about the NASDAQ 100. And I just look at my other screen here and I look, okay, you know, what's happening with the mega cap, and they're up 1%. S&P is up less than, it's up 8 bips, and the NASDAQ 100 is up 77 bips. So you just got to look and say, well, where's Amazon? Oh, it's up 1.7%. You know, where's Microsoft? Up 65 bips. That's kind of what I look at right there. It's just, that's the market we're living in. Facebook up 3.6%. Okay, so this is the cues. You know, it's very, very difficult to turn around something this strong with such momentum, with such few stocks in it that really take it to new highs. I'm just looking at another screen here. So yeah, it's real strong today. It's up. You're up 75 basis points, and breadth is flat. It's 50 up, 50 down. So that right there tells you that it's very few moving higher to new highs. I also noticed yesterday in this, S&P had 59 new 20-day highs and 94 new 20-day lows, and that's pretty incredible considering the market made a closing high. So that that's what's driving this here today. It's just very few stocks that only need to do the work. And so look, it's you're getting you have 74 on the RSI, slightly diverging because it was at 80% here, and it's come down. Look, we just have to wait and see, you know, if these mega cap stocks can exhaust themselves. David, the manufacturing and services PMIs have been elevated above 50 all year. Yeah, they will. They're extended, and they will start to moderate. And one of the big concerns that people have had and voiced is that the problem could be, yes, they will moderate probably into the new year. We'll probably see, you know, further inflation, but that'll be supply chains, restoring. You'll probably see the Fed aggressively taper into perhaps a little bit of a slowdown. May not be that much, but that's probably the big risk in 2022. people don't anticipate that things may slow. If the pandemic, COVID rears its head a little bit more, that could be a problem. So that's one thing there. Phil, on that Mastercard, I'm not worried about the 9 perfecting on that. Let's see. Okay, hey Tom. Could you provide your thoughts on why money flows heavily into FANGs on the extreme breadth disparity days? Index up, strong breadth, very negative. Yeah, net breadth is negative today. It's because Contact, he says that a PM cannot hold cash, and when they're getting out of the market, they sell most stocks and move those funds in the most liquid stocks. Yep, that's true. I was on Real Vision recently, and there was another person that was saying that the FANG stocks, the mega cap stocks, are like, it's like a bond, which in many respects, yeah, maybe they've got solid balance sheets, better balance sheets than the US government, and they keep buying back stock, and they can print basically anything they want, even bad numbers, and the stock goes up. So yes, I think that's people jamming into those. It's pretty simple. It's very liquid. And I can tell you that when you are running a substantial amount of money, it's not easy to move in and out of some smaller names. So that is definitely what I think has been happening. So here's one of the FANG indexes. I haven't annotated this, I just popped it on here. This is the Facebook, Apple, Amazon, Netflix, Google. Yep, okay, you have a 13 here today. 13 worked here. Slowed, 13 here worked. Look, it's getting overbought again. Let's go to the Microsoft, Apple, Google, Amazon. I need to put one in with NVIDIA. But I think that just Nelson, to finish up on that, yeah, people, that's the usual strategy. It's simple. Put your money in. And I've talked to a lot of portfolio managers, brokers, all, you name it. They've all complained that they've underperformed this year. And it's all because they just can't overweight themselves in 5 stocks. And those stocks have lifted the market, and will continue to until they exhaust themselves. So, oh, here's the MAGA. Okay, so you got a 13 here, combo 13, wave 5. This gave you just a brief little pullback. This was 9%. This was 7%. Brief here. So bottom line is, look, we're extended. We're getting exhaustion signals starting. What will happen? I'm not quite sure, or when things will turn. But liquidity, a lot of people have said liquidity is so great, but I will tell you that I've heard some credit people talk that liquidity is starting to get a little funky. We see on occasion some drawdowns that people say, well, you know, what was that? How did it? I don't think liquidity is as great as everybody thinks. They clearly say that when things are going up, but when things get a little dicey, look out. Here's I just want to update you on crude. I'm pulling it up here. So we are almost at the wave 3 downside price objective. It's on day 6 of the downside setup. And the way I always like to look at it is, where did day 5 close? Because the day 9 has to close under the close of day 5, and that would have to be under 79.01. So day 9 has to be under that number there, and I think that could happen. Armando, your question did not go through. And let me see. Yeah, so that just looks horrendous. Meanwhile, the SMH is hitting a new high as we speak here. And that's partly because NVIDIA, NVIDIA is hitting a high as well. It just doesn't take a lot to move markets, people. That's what we've learned over this last year. It does not take a lot. And it could be certainly, it could certainly be the, you know, the gamma squeezes and people deliberately doing this. Someone just said Fed's Waller, Bitcoin is basically electronic gold. Ooh, let's buy it. And it's moving up. Bitcoin to me, it's very interesting because it's really not backed by anything other than confidence. And you just had someone from the Fed say it's basically electronic gold, and it's moving up. So that is that's what happens. Okay, so here semis. We've had good luck in the past with the sequential. We just had a sequential here, but remember we had 2 9s here. So this 9 gave us this sequential here. We had a combo, false hope here. And then this 9, we're now on day 5 or 6. And you're probably saying, well, where is the 4, 5, or 1 through 4? Let me just show you one little thing here. Okay, wait, hold on. Here it is. So I'm gonna hide this. So there you go. This was day 1, day 2, 3, 4, 5, and 6. So you can hide the a previous sequential countdown so you can see what number. Look, this is, it's gap up city here. It's up from 250 to 313 in, just a month. And I feel like it's getting a little Tesla-like, where nothing really makes sense. And that's been sort of the market I've seen. So do something to show you guys one thing. I don't know if you guys saw this the other day, but this is the attribution for the SOX index, the semiconductor index. And as you see, not everything is up. You'd think, well, for the year, it's, oh, excuse me, this is, yeah, it is the year. It's just absurd. And that's the points, up 39%. But look, NVIDIA's just light years weighting 25% versus AMD, AMAT. And so it's such an overweight in this index that when things do start to moderate with NVIDIA, look out, because this semiconductor index will come down. NVIDIA, God, it's just, this 13 did not work. Covered it, I'd have to say, better. I just saw it did not reverse here. I got out, and I guess I can look back and say, great, I did the right thing, taking a loss. It's on day 10 of 13, and it's still, ridiculously overbought here with the RSI. And it can and will come down. It doesn't make a whole lot of sense. Okay, what is the one thing most positive or negative on your mind that you don't hear anyone talking about? That's a good question. I think the most positive thing, let me start with the negative. The most negative thing on my mind right now is that we're getting this this rally with very few stocks taking it up, and that's people are chasing on margin with call buying. They're doing everything they possibly can, and it's turned into more of a casino, especially with the volumes of call buying is extremely negative. It won't take much to reverse that gamma because it can work on both sides. Remember, when you have stocks going up and there's call buying, the dealers have to buy, and they're hedging themselves, delta weighted hedge. So let's say they buy 30% of the actual amount. That's a delta. If it goes higher, they've got to buy more, and it's 40%, 50%. And if it gets so much, it feeds on itself. It can work on the opposite side going down as well. So that's something to watch. And that can be, I could say that back in March of 2020, there was a negative gamma situation because you did see huge call buying into that February peak. And that was another speculative time. So as for anything positive, I'd have to say that so far the U.S. has not had lockdowns, and I think the deployment of the vaccines has been better than I think anybody anticipated. But now that people are saying, "Oh, you're going to have to get a booster shot," and if the vaccine shows that it didn't work or it wore off, that's going to turn into a real negative. But for the most part, the economy's reopened. It's strong. People are going back to work. I'm seeing the train parking lots that there were any cars a year ago. Now it's starting to fill up, which is a good sign. And life is returning to more normal. So that's the best part. Things are overextended in the markets, euphoric. That's a concern. That to me is negative. I think the Fed is boxed into a corner as well. I think that's a negative. If inflation continues, which I'm not a huge, inflation's going to continue and be the worst thing in the entire world. I do think that some things are transitory, some things will come down and moderate. But if that doesn't happen, the Fed's going to have to act, and the people that are going to be in the Fed with most likely 3 new dubs that Biden's going to nominate, I think it's going to change what the Fed's mandate is, and I think that's going to be worrisome because I don't think these people will ever want to raise rates, and we're talking from 0 to let's say 3%. And remember, Volcker went from 10% to 20% to control inflation. That's the big risk, and see what happens. And if the market pulls back and they, oh my God, we got a 10% pullback, let's turn on QE or let's lower rates. It's just going to get, it's going to be absurd. And the amount of stimulus that the Fed does will start to wear off. Those benefits will start to wear off, and people won't believe the Fed has credibility. And I think that's a very important thing. As I mentioned, Janet Yellen's losing credibility in the Treasury, and I think the Fed risks that. I think Powell, for many respects, has risked that. Okay, so Armando wants to know about EEM. I'm not going to do EWZ. Well, I know I'm going a little over, but Nelson, I've said Brainerd's going to get it. Question, Powell or Brainerd? I think it's again, I think it's a political thing, and I think that the progressives want someone that they can use politically, and I think Brainerd's that person. So that's it. I think Powell will also be the scapegoat for all the ills of the economy and inflation, and I think that's which I would agree, or I'd say that he probably deserves the blame on that. He did way too much. Okay, this is EEM. It's just been just a mess. It can't get this sequential going. It just fails. it doesn't look great. But I will tell you this: when people say, "Well, what's going on with emerging markets?" I always say, "Well, let's look at what EEM holds," and it's not necessarily like small cap. You know, it has. Pull this up for you. I love when people text me when I'm trying to do something. Okay, so this is the EEM, and look at what's the largest weights. Taiwan Semi, Tencent, Samsung, Alibaba. I mean, these are massive, giant companies that have a substantial amount of weight. And you also have, it's weighted a lot of China banks. And so right now, this is it. I mean, look, they have 1,248 holdings in here. So once you go a little, down the list, you're seeing they're basically, they all have to move together. And so it's a very broad index, but you've got big weights that are going to weigh on it. Now, Taiwan Semi is 30% of the Taiwan ETF and the index. And I think it's maybe one of the most important stocks that you could follow and keep on your board, because if China and Taiwan continue their hostilities, or China versus Taiwan's on their hostile the rhetoric, I think Taiwan Semi is the one you're going to grab if you're shorting a stock, or if you're long semiconductors. You watch that, because Taiwan Semi makes semis for everyone. It's so big. And look, it's sort of been a choppy stock for the last several months, and it peaked a while back, so it really hasn't done much. It might just try and break out, and you saw it was a new high here. As you see, it sometimes will blink. So if it goes up another, it has to be above this here. So that is 124.70. Yeah, if it gets above that, there it is, the 3. So it's in wave 3. If it can, well, come on, closes above that, it could move a little higher. So keep an eye on that. It's overbought. I think all semis are terribly overbought. And if we start to see one scenario that's going to happen, I promise you, semiconductors, companies are double, triple ordering to get an allocation. They need allocations to produce products. So they're going to say, well, I'll buy 3 times. Cancellations will happen. When cancellations start happening, that's when the semiconductors are toast, because their guidance has been given that it's going to be X amount, and those companies start canceling because they get enough product. Maybe their products are starting to slow. That's when things fell apart in 2000 with the semiconductors. So that's what I'm watching. So it actually, yeah, maybe. I just don't like buying breakouts with the RSI over 70. We've seen, failures way too many times. Now it could go crazy again, but like the beginning of last year, I just don't know. But it's already extended. I just can't chase right now. I feel like this is a chaser's market with all the call buying, with all the craziness, rather dangerous. So as I see, the market is lifting. One thing that happens on Fridays, on Fridays, the VIX index gets hit. And I don't know why, but maybe it's someone, it used to be, the talk was that Janet, when she was Fed chairman, was selling the VIX hard on every Friday. But as you see here, this is where it is. It opened here, went up, and now it's back near the lows. And I think, was this last Friday? Yep, last Friday it was sold off here. It's just, it's a phenomenon. Maybe it's tied to the option expiration. I don't quite know, but it's something that is interesting. Mike, fertilizer, IPI and MOS. Let's pull them up for you. And then I'm probably gonna, if anybody has any more, I'm probably gonna jump because we've got stuff to do. And this was just a nice informal call. I also just want to let everyone know that we will be doing more webinars. The craziness, getting all the site together and some of the little bugs that we had to deal with, those are alleviated. And so I now have more time to focus on stuff. My fabulous intern, Tyler, is back. And so notes should be coming out a little earlier. I'm not putting one out today since I've done this. Wait, let's potash. God, these were so beat up. But I wanted to cover stocks, bonds, some of the internals that I'm seeing. And Europe, we did the dollar, we did Bitcoin, we did the 10-year, and just to get an idea of an overview of where things are. The most egregiously overbought sectors, that's XLK, XLY, SMH. We did that, but here we are. This is MOS, or no, IPI. Well, look at what we have here. We have a combo 13 and a sequential 13, aggressive sequential 13. And took a few days, but we did get that reversal obviously here. And now we have a price flip down here, and it's continuing on day 6. You know, it's a little scary because it's the RSI is under 50. It's a little oversold maybe, or getting there. But I certainly would wait for the sell setup or the buy setup 9. Watch the 50-day. That could be interesting as well. Okay, here we are, MOS. Well, thank you everyone for being here. Okay, so MOS is looking a little bit more nervous. Look at the TDST right here. It's held it. And but you do have a sequential on day 5. If this breaks, I think it could go lower. And that's just, the TDST is an important thing to watch. The VIX will maybe move after this expiration. A lot of people have said, Spot Gamma guys said that with the big expiration, volatility will increase. We could see more upside, more downside, but without that gamma in the market, it could get interesting. But again, this is one of the strangest markets I've ever seen, with the speculation, definitely the highest I've ever seen. And you know, back in 2000, it didn't take much in April or March, and things started to get very choppy. We saw moves of 10-20% up and down throughout April. Things got choppier and more dangerous. Now we have different things. We've got a Fed that's all in, they're starting to taper. That's a risk. They don't have any ammo left. Okay, maybe they'll increase QE, but it's still in my opinion a very risky market. It's extended. You have catalyst if COVID increases, that will be a big negative. Don't get into the, oh, I'm going to buy what worked on the last shutdown. That will not work again. Everything is extended, and chasing these extended names is just, it's gonna backfire. So just I think right now you just want to stay cautious. So all right, I'm gonna let everyone go. Thank you, I appreciate it. And send me emails. Thank you for all your support, and hope you have a very nice weekend. Take care.